Hi, Precious. Good evening.
So I'm trying to know which other name to call him. He's Oga in financial modeling, and I mentioned that even Microsoft has actually recognized him, in what he's doing, and he actually has different boot camp where he has actually trained people on how to actually build financial model, right? Uh, Victor, welcome again. Thanks again for honoring my invitation. I really appreciate this. And for my team, I have Nora. Nora is, a senior financial accountant on the team. Then I also have Nayotomi Waidu, who also work with me on the team. She's also a senior personnel too, in the finance team. So the idea is for them to be able to do more of, financial planning analysis. And I noticed that this is one of the skills, that they are going to need to be able to, venture very well in that particular unit. So thanks once again. Ayotomi Nora, please let's try to pay attention. Let's ask questions when necessary, so the Victor can just, assist us, in this particular regard. So Victor, over to you.
Okay. Hi, Ayo and Nara. I hope you are doing well this evening.
Hi, Victor. Good evening. Yes, I'm doing well. Are you?
Okay, I'm good. Good to have you in this session.
Good to have you too. Thanks for, making the effort to come around to teach us. Thank you.
All right. Ayo, knock knock. Okay. Hi, Ayo. I hope you can hear us.
Sorry. Hi, Victor. Good evening.
Yeah. Good evening. Hope you are good.
Fine. How are you too?
I'm fine. I'm fine. I'm good. I'm good. Okay. All right. So let's get straight into it. All right. And I'm glad you guys already have a finance and accounting knowledge. So today is just for us to just take a look at what we call fundamentals of financial modeling. The truth about this is it is what you know, all right, and it is just to bring it out from you that hey, you know what, you know this thing, this is what this is saying, this is what it's saying, and this is how we apply it. So we have a limited time, so let's get straight into it. So please, in case you have any question or need any clarification, you can always ask or type in the chat box or click on your hand to more like raising hand so that I can answer the question. So we're just going to touch three things today. Let's first understand how it's all started. Right, any profession you are trying to go into, it's always good you understand, hey, what's the whole story behind these concepts, right? The people that created it, what was their thoughts, right? Because once you have that, it kind of allow you to understand any concept that is being taught around that part. Now, in relation to that, we're going to discuss something we call business cycle and accounting cycle. And irrespective of the type of business you do, right, or irrespective of the industry you fall into, definitely you do what you this concept is applied. So we can also try and mute our mics, but if you want to have a discussion we can unmute it, right? So we don't have any background noise. Okay, so business cycle and accounting cycle, and then we now.
Hi, Victor. I think we can't hear you anymore. Oh, sorry. Am I the only one?
Oh, Apple, thank you for calling my attention to that. Well, I thought I've been talking since. I don't know my
Oh,
mic
okay.
is muted. Thanks for that. Thanks for that. All right. So, let's get started, right? Just to have a discussion around what we call fundamentals of financial modeling. And we're going to touch majorly three things today. The first one is how it all started. Irrespective of the profession you want to go into, it's always good you have the storyline behind how the profession was kind of caved out, right? How they started, what were the thoughts around that, because that kind of give you a more like a storyline shape, and you can connect it to any concept they are treating under that. Now, in relation to that, we'll be discussing something we call business and accounting cycle. The financial modeling itself is very practical, right? It is what we do day to day. So we see how this business cycle and accounting cycle, how they tie together with the story, and how we now use that story in building business concepts in which financial modeling now come into play, right? So, why financial modeling? Let's first understand how it started. And this is one thing I want you to understand. There are a lot of people that teach financial modeling here and there. So it's very easy for you to learn financial modeling and it's difficult for you to apply it. And it's just because of one thing. Because most people seems to leave the story uh, behind financial modeling concept. They leave out the first knowledge. So let's take a look at, we have two approaches to building financial model. And the first one is what we call mechanical approach. Now, most few people only teach this part. People just focus on the other parts, which I'm still going to show us. So the mechanical aspect of financial modeling is, hey, let me understand how business or businesses, how they are being run. Then how management think when it comes to business, because that's the whole thing about financial modeling. You want to take a step into the future. And all this, they aid decision making. Hey, I have 100,000, I want to invest it in this business. What is my expected return over this period of time? So it's all about future decision making, and that's what management, that's what they do, and that's why they pay management those huge sum of money. Because hey, management, they understand what the income statement is saying, right? They understand what the balance sheet is saying, that hey, our business, we need to increase our book value. Hey, we need to increase our market share, generate more revenue. Now we don't need to manage our cost so that we can have a good profitability. That's all about management. They understand the business. On the other part, we now have the artistical part of it. And what are we doing here? We just go straight into Excel. We create our structure in Microsoft Excel. We put our values together, right? So you do it like this, you do it like this. In fact, we use our standard, fast standard. Say any model you are building must be flexible, must be accurate, right? That must be appropriate and be transparent, right? And for you to build any model, you need inputs, calculation, and outputs. And the whole discussion is just focused on that part. Now, when it now gets to you building different model for different industry, you then get stopped. You build a model, the model is not even making sense. But because you don't have that mechanical understanding of it, it becomes very, very difficult, right, for us. So let's now take a look at the story behind this concept of modeling. As I said, we have the mechanical and we have the artistical part of it. So let's first discuss the mechanical aspect of it. The artistical part, I feel, is more like the most simplest part of it. Now let's look at how it all started. And this is one thing I want you to understand. In the early days, from early days up till today, and in fact, till we continue this world, the world is only engaged in one thing, and that is transaction. Everything we do in the world as a whole, we are all transacting. And we have this funny Yoruba adage that says, this world is like a market. And they are right. Trust me on that part. Now, in the early days, they started with trade by barters, which means you have something in your own compound, in your environment. I have something in my own environment, which means the creator kind of created the world in a very dynamic way. So you can't have it all. So which means you need to have something, I have something. Then which means for me to get what you have and for you to get what I have, what do you think we need to do? So let's make it interacting. So let's make use of the chat box. So you have something, I have something. I need what you have and you also need what I have. What do you think we need to do for us to be on the same level? So we can type in the chat box as well so that we have the good flow. What do you think we need to do? So you have something, I have something. You need what I have. I also need what you have. What do you think we need to do? Definitely we need to exchange. We need to transact. So that's the way it has been from onset. And trust me, to continue like that. Now, in the early days, we call it trade by barter. Right? So you have something, then someone will weigh it. Oh, this thing is worth this. You can use it to exchange for this and that. That was a little bit stressful. Then they introduce a means of exchange, and that's where money came into play. So back then in those days, you have cowries, you have coins, you have gold, you have silver. So you can take one, and so someone has actually put a measure that, hey, if you have this so cowrie, you can use it, is worth to get this so value. And that is the same thing we are doing in the world today. Say, hey, if you have 1,000 naira, that means we've placed value on that 1,000 naira to be able to buy what something worth this, something worth that. If you have a dollar, someone, we've placed the value on it that, hey, it can get this, it can get that. It's just to do that transaction. And that's the whole story from early days. Business, transacting, exchanging. Now, a big thanks to our wonderful man, Pasiolo. Then he introduced the concept of bookkeeping, which means, hey, let's start recording. Let's take it a step further. Let's uniform how we get to do things. Then we had our source documents. From there to our trial balance, down to we preparing our financial state. It's all about we keeping that record. In fact, they decided to standardize it, and they form Institute of Accountants then. Now, it did not stop there. The next phase now came in as in form of taxation. And when we're saying taxation, as in then, there's something we call homage. So which means in your own compound, you can have something that other compound don't have. Right? Or you need something that other compounds they have, but you have something a little bit more superior. So you'll be able to develop some weapon, get some resources, and you go there and you take over the state or their compound. So now, okay, you know what? I'm going to allow you people to be living your life, but I will be taking from you guys. So hey, homage came in. Oh, percent sharing, cost and tariff. Then there's a need to also develop the environment. Okay, so if you go to your farming, you harvest, you must be able to send like 10% to the head state. And that's where taxation also came into play. Now, with this, there was one guy. It's like a professor, right? I think he was going for his that should be his PhD or something in finance. Now, luckily, he had this knowledge of technology then. Now, they now give them one assignment. And the assignment, they asked them that, okay, you know what? Let's assume you have 100,000 today, and you want to invest it in a business. Well, maybe you want to invest it in one portfolio, security, right? And I say, okay, so let's assume they promise that they'll be giving you 5%, 5%, right, over your investment. Then I say, okay, so now go ahead and do your calculation. What if something happened in the economy, right? What if the inflation kind of increased to this social amount? How will it affect your investment? What if, just let's even create different scenario. What if the investment they promise, right, by the time they start the operation, if it's no longer 5%, if it is 2%, if it is 3%, if it is 4%? So which means you need to create that different scenario. So that was the assignment. Now that guy sat down, I was like, okay, so let's assume I have 10 scenarios. That means I'll need to go and build 10 different calculations. So if it is 10% I'm using, you do that calculation, you have the answer. If it is 5%, you go and do the calculation, you have another. But this is really not efficient. There should be a better and efficient way to get this done. Then he called on his guy. So the guy name was Bricklin. Then he called on Bob. That, hey, Bob. Bob is a tech person. Hey, look at this, look at this, look at that, look at that. And Bob felt like, okay, this is good. I think we should be able to build something such that you have the inputs, you automatically build your calculations, and you have your output. So which means anytime you change your input, your calculation automatically calculates, and you have your output. And that is where the use of spreadsheets came into play. If you look at that story, hey, you want to have input, if you change it to 10, change it to 5, your calculation automatically calculates, and then you have your output. And that's how we got into the use of spreadsheets. So from Visca, then we moved then to I think Lotus. We all remember our computer history, right? And then from there we started with our Excel, which we use in building our model. right? And that is how we got here. And the whole thing about financial modeling, it's all about business operations, right? And also being able to forecast into the future to be able to make the most accurate decision. So then now let me ask you, does it make sense? What do you think about this story? Does it make sense? If it makes sense, just type yes. If you have any question, you can also type it to the chat box. Do you think this makes sense? Do you have any question around this before we go to the next thing? Do you think the story makes sense? Okay. Do you have any question, any clarification before we go straight into the next one? All right. So now, with this understanding that, hey, the whole world is all about transaction. We are doing this business, do this and that. Now, for some people to get advantage, right? Oh, you know what? Let's even forecast what will happen the next 5 or 3 years, so that we can be at a safer side and have that advantage. So, okay, oh, wait, something will happen in the next 2 or 3 years. What do you think we need to do today? How will that affect us? That's the whole thing. Now, business cycle and accounting cycle. You need to understand the role of both accountants and finance and tax experts. As I said, it's all about business and it's all about transaction. Now, that transaction has now shifted from what it used to be. Remember, then it's all about, hey, trade by barter. You get this, I have this, and all those things. Now we now have a means of doing that transaction, and which means if you have a means of doing the transaction and there's a value on it, it will definitely not come easily. Which means there will always be a cost attached to you getting that. Now the world is now into what we call cash. Irrespective of the business you do, cash is king. Always remember that. Even non-for-profit organization, they need cash to run their thing. We as human beings, we also need this cash, which means cash is king and is a form of measuring returns. So they say, oh, well, Nigeria economy is worth this so amount. Oh, USA economy is worth this so amount. This is what so amount. Oh, I'm expecting a 10% return. Is all about cash, right? That's why I love our little Igbo people, right? Hey, if it's not money, don't don't talk to me about it. So, which means cash is king. And now, the use of cash, we also need to understand how cash also revolved in a business. It usually starts with operating assets. Now, irrespective of the business you do, trust me, you need operating assets. Operating asset is asset. It could either be a non-current asset, it could be a current asset. Cash itself could be asset. Property, plant and equipment could be asset. Platform, maybe you have a software that you are using, it could be it could be it could be an asset. You have inventory, it's an asset. Asset is asset. Now, for manufacturing firm, definitely the assets will be what? Those plant and equipment that they use in doing their production, and those inventory, which is the product that they are selling, right? If you go to a bank, you also ask, hey, bank, what are your operating assets for a typical bank? Definitely, you know that let's focus on their key business operation, which is give loan out to people, and that means it is their loans. Because the more loans they give out, charge interest on it, the more revenue they will make, which means that operating asset must be generating revenue for the business. So now let me ask us, for a typical tech company, what do you think will be their operating assets? Yes, let me ask us. For a typical tech company, a fintech company, okay, let's say fintech company, what do you think will be their operating assets? At least based on my explanation of these operating assets. So let's type in the chat box. So for a typical fintech company, what do you think will be their operating assets? Now, a company can have more than one operating asset. It could be a combination of A and B, right? But as long as those assets they are generating revenue, So their products, right, which means the software, the platform. So which means if you have a platform, right, or a software that can only take 1,000 active customers, that means your revenue is limited to that. But if you expand it, oh, you can now take 5,000. That means your what? You can increase your revenue, and you also definitely need cash to be able to do that expansion. So operating asset. Now you use that operating asset to generate revenue. You manage your cost efficiently, and you have profit. So operating. So when we talk about asset turnover, it's one important metric. It's one important metric because what you use that to measure, hey, how well am I using my assets to generate profit, right? Because you can be generating revenue and your expenses is eating up your revenue, then it's not making sense. Now you use your operating assets, make profits, and you convert that profit to cash. You convert that profit to cash, which means a business can be profitable and cash deficit. And a business can have enough, can be cash surplus and be making losses. We'll be discussing that by the time we start the model build. Now, from this cash, we don't just leave cash idle because it is king, which means you need to what? Invest it back into your operating asset in order to keep generating revenue and to lead to expansion. Now, when it comes to expansion, irrespective of the business, as I mentioned, this cycle remains the same thing. So, operating assets. Okay. So, for a typical manufacturing company, let's say, for example, Coke. So, their fourth operating cycle, they use their product one. So, this can also apply to products. They use it to generate revenue. They have surplus cash. So, cannot leave the cash as do. We need to what? Keep up the business operation as well. So the next one, they will now reinvest that cash. Okay, let's start another product. So maybe Fanta will now be the next product. Fanta will also go through its own cycle. So as a modeler, you need to understand this about business. Now, let's now look at the role of accountant. As I said, the thing is still about business, transaction. Operating assets, accountant will now help us to do the recording in our balance sheet. So which means the first value of a business, of a company, the first value of a company can first be seen in their balance sheet, that asset line item. Because that is what you will use in generating more revenue. Let's say for a restaurant, if you want to buy a restaurant today, definitely the first thing is, hey, do you guys have building? All the equipment that you use in doing your production of food and everything. If you take it to market and want to sell it, how much is it worth? How much have you stated in your balance sheet? So, I mean, the first value of a business can be first seen in their balance sheet. So accountants will help us do that recording because that's what they are doing, right? Remember, recording. And then this profit is now being reported in our profit or loss account. So in our profit or loss account, you can only see three line items. So in the part of data analysis, right, when we are categorizing income statements, right, those are more like how we categorize it. So, hey, are you an income line item or you are an expense line item? So which means anytime you deduct one revenue from expense or one profit from one expense from profit, you always get one profit line item. So is either your profit, expense, or revenue. And then for the cash flow, I'm quite sure you already know that will be recorded in our our cash flow statement. And that is the role of accountant in this cycle. To help us to do what? Recording. What about finance? Now for the finance, they also deal with these three cycles. So number first thing is what is the best sources of funding? So our balance sheet can only have two line items, right? Is either this line item, are you a source of funds? And also, are you a use of funds? So our asset is basically how we use our funding. Now, where those fundings are coming from, what we call our funding part, our liabilities, which is a combination of your non-current liability, current liabilities, and equity. Because your current liability is also a source of financing to your business. So by the time we are discussing structure of financial statement, we'll discuss more about that. So For the finance, they say, hey, what is the best source of funding that can give us the optimized return? And on the profit, it's all about market penetration, gaining market share. Hey, we need to sell more. Oh, your revenue this year is 10 million. Oh, next year, I want to be able to sell more. I want to sell 25 million, which will definitely increase your market share, gaining market, right? Having the customer buy more of your products. So all the strategies around it all, which is about thinking about the future. What do we need to do next? What do we need to do next? That's all about financing. Finance guys, that's what they are helping us to do. They analyze the past and be able to make that decision. Then for the cash part, we use that in measuring our ability, measuring the returns. So if you make this decision, what will be the impact? What will be the cash impact? Because it's all about cash. It's all about cash. Because once cash stopped, business stopped. Look at during the pandemic period. Look at what happened to different companies, right? Most of them fell short of their financial obligation because it is that cash that we use. Now, how does this now flow into what we call financial modeling concepts, right? How does it flow into this concept now that you have this understanding? The first one, so let me ask us first. Let's relate this to typical business. Let's assume you want to start a business today. What's the first thing that you will need to do? Assume, hey, I have a business idea and I want to start it today. What will be the first thing that you will need to do? So you can type in the chat box. Yeah. What do you think will be the first thing that you need to do? Let's assume you want to start a business today. So let's type in the chat box. Assume you want to start a business today. What will be the first thing that you need to do? Okay, seems someone is off already. Okay, so which means the first thing you need to do is to what? Is to draw out the plan. Okay, so it seems the Zoom we are using has a time limit because it's showing remaining meeting time is 3 minutes. Right, Festus, can you hear me? So that we are not logged out of the meeting automatically. Can you hear me? So we are using the free version. I think that's restricted to 45 minutes. Hi, Festus.
I'm not sure Festus is here.
Okay. Because the showing remaining meeting time is 2 minutes. So that we are not logged out. Okay. So I don't know. Maybe what we need to do is to pause here, and then maybe we'll continue later. Because already showing remaining meeting time is 2 minutes.